Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about the poor man's covered call trade I just put on with Coinbase, knocking down some $2,100 in premium. We only invested $8,200. Yeah, you heard that right. We collected $2,100 in premium, only invested $8,200. I'm going to show you exactly how I did that. But what I'm going to show you is that I take that money and we invest in monthly dividend ETFs, knocking it down, creating a wealth money tree. What I do is I take my covered call profits and we roll them into monthly dividend paying stocks, generating positive cash flow, living the good life. I'm going to show you that here, so I want you to stick around. Here we are, January 2024, very first 2 weeks, absolutely breaking every record in the first 2 weeks of trading, $25,500. And we're only in the first 2 weeks of January. January has been a great month because we come out of the prior year usually with a nice little Santa Claus rally, right? And that's what Wall Street loves to do, man. Buy up all those stocks that have been beaten down. As they get into the next year, they can actually show that they've made a lot of money. And that's exactly what happened to Coinbase. This is the stock we're going to talk about today. Coinbase has absolutely ripped it higher over the past month, rallying from about 82 to 182. And this thing was flying off the shelf because of all those spot Bitcoin ETFs that were coming out. And Coinbase is going to get the business for some 11 of the 13 big ETFs that are going to come out. So that's very important for Coinbase's business. And that's exactly what happened to the stock. Absolutely ripping it parabolically to some $187 per share. I got caught up in a lot of that because I was selling these great deep in the money strikes every single 4 or 5 days, making $1,200, $2,500 a trade, absolutely ripping the leather off the ball. Then the last week of 2023, I went ahead and got caught in a trade for which now I own some shares, and it's not looking good. I have a cost basis of $175 on about 2,100 shares. Now, I made a ton of money, but I'm not using that as cost basis. If I were to use that for cost basis, that would be some $20,000 that I have made, which means my cost basis would be closer to $155. And we can actually sell some 155 strikes that pay over $10 a pop. Coinbase is volatile and you get paid if you're playing Coinbase right now. Even though it's trading at 130, there's a lot of things happening out there positive with Coinbase. And I'm not going to try to convince you because this is a very volatile stock and one that, quite frankly, if you're risk adverse, man, you cannot even touch Coinbase. Because the premiums are so big, I love it and I'm going to play it. I'm going to show you a poor man's covered call trade right now that exemplifies that. And I talked to you about a membership. Well, all the members get to see all of my trades in and out. They see them all. Plus they get trade alerts. They get videos you don't see here. They got a phone app. They can see all the trades on their phone. Go to the blog post. I'll tell you what, absolutely love the membership. And we do some things over there that you'll never see, such as the upgraded CTP dashboard for which you can search for your next great covered call stock. And it has the premium dividend dashboard for which it's typically loaded with over 500 stocks that are paying a dividend within the next couple days, if not week. I love it. That's where I go to try to find my next covered call with dividend capture trade. So go to my website, cptdashboard.com, click upgraded dashboard, get your 1 free month offer. Now, members saw this, members got this. This is a Coinbase trade, but it's a poor man's covered call trade. What does that mean? I had to go out and buy a Leaps call option to support this trade, and that's exactly what I did. Using the poor man's covered call tracker, the initial trade setup, for which I have for free on my website, cptdashboard.com, click free spreadsheets, get your very own copy. We went ahead and plugged in some numbers for this Coinbase trade. Now, what I was going to do is buy a Leaps call option. Now, I picked the 100 strike. It's a very important number, okay? I want you to really focus on why the 100 strike is so important. We ended up paying $41.15 for that. That is a lot of time value. But again, we are talking Coinbase that absolutely rips it. There is no way you're going to be able to buy a Leaps call option and not pay hella time value. So we get that. So we just have to make sure every single trade moves us forward, and we have to try to get out of this trade when it's trading in and around 133. So that's very important. I get involved now because I think Coinbase has fallen off such that we're going to get more favorable movement than not favorable movement. So this trade is risky in so many ways because Coinbase is going to rock and roll one way or the other. And because my Leaps call option is an 80 delta, this thing is going to move 80 cents for every $1 move in the stock. So I'm paying $41, and as the stock moves up and down $1, my Leaps call option is going to move 80 cents of that. And I'll tell you what, it could be nasty waking up one day when Coinbase is trading at $90 a share and my Leaps call option is down some 50% or more. But hey, look, we stay the course because we bought that April 2024 Leaps call option. So the plan here is we're going to use this as long as the stock stays above 100. That's the key. If it dips below 100, we can't use this Leaps call option anymore. Because again, the Leaps call option gives us protection. So if we had to go out and buy somebody's shares at 100, we could. And because we're buying the Leaps call option in lieu of the shares, I'm not spending $132 per share. I'm spending $41 per share. So now we have the paper to buy somebody's shares at 100. We can now write a near-term covered call. And that's exactly what I did here. What we did is we selected the 135 strike, and it was paying some $10.79. Here are the absolute crazy insane numbers. Right off the bat, the premium is going to be $2,100 in the account because I'm doing two contracts because I don't want to get too loose on this trade, okay? I don't want to do 10 or 20 contracts because I'll tell you what, Coinbase falls $10 a day. Now, I'm hoping starting this week and moving forward, we can get some support here, and it kind of muddles up or down, let's say $5 here, $5 there, but it stays near 133. Here is the premium that gets deposited into my account for this trade. This is a 28-day trade, so the premium alone represents 26% of my overall investment of $8,200. So $2,100 has been dropped into my account. Now we have to see how this trade plays out. And let's go ahead and break this down because I tell the members exactly my expectations. So you can see that chart right now. It's absolutely getting ripped. But remember the 100 strike? That 100 strike leap that I bought? There's a reason I did that. And we're going to talk about it here in a minute, so stick with me. Oh, by the way, and we're going to talk about the dividend paying ETF that I bought $2,100 worth. And I think you can already guess what that is if you're looking up here. Yeah, that's right. We're going to talk about CONY, which is a yield max stock that essentially uses Coinbase to generate its dividends. So stick around. We're going to talk about that. The 100 strike is very important because recently, with Coinbase getting ripped, analysts have been coming out saying, look, man, this thing can fall to $100 a share. Now, why do you think they're talking $100 a share? Well, once it broke resistance at $100, this thing has not looked back. And anytime a stock has a parabolic move like that, we have to find support. And when it did find somewhat of a support here, because you could say it hit this number, bounced back, and then hit this number again and rallied higher, that becomes support. And in fact, look what happens. It treads a little bit of water, but then it dives. Well, guess what? Now it's trying to find new support. Well, where do you think new support might be? Well, it just might be right here where it last broke resistance before it popped higher. If it doesn't hold this number, my take is this. Right now it's trading for $130. This sucker will see $100 real quick. That's my opinion. I don't have a crystal ball, but this thing is trying to hold on to support. Now you say to yourself, well, why isn't it holding support? It's because of this parabolic move. You can't have people on Wall Street making 100% on their money literally in 1 month. So there is going to be little to no support if this thing starts selling off. And that's exactly what happened. You know, it's funny because I thought in December of 23 they would have sold this thing off and taken profits for last year, so they could show that they made all that money last year. What we find is this stock rallies into 2024, and now they're starting to peel off gains. Now they're going to show that they made profits in 2024. And think about it, they don't have to pay for any of these profits until April 2025. So now you can see why this thing is parabolically moving the other way, selling every day at a clip of some 5, 6, 7, 8, 9%. So that's where we're at. So what we have to do is try to make a decision here of where we're going to get involved. So that's what I'm doing. I'm thinking if people are saying that this thing could fall to 100, basically retracing almost all of that run, well, let's go ahead and set up shop with a Leaps call option at the 100 strike. So that's what I did. Went out and bought that 100 strike. We paid $41 for it, paying hella time value, ready to knock it down with my first covered call. And sure enough, we get paid some $10.79 or $2,100 on our very first trade. And that represents about 26% cash invested. Only did the 2 contracts. We understand why. This trade will go till February 9th. It is a 28-day trade. Now, if this goes where I have my shares taken away, which means I have to close the near-term covered call and then sell the Leaps call option, well, this is the total take in theory. Because remember, there's going to be slippage either way, and if I have the market maker take my shares, that's going to cost me even more money. That's why when we use a poor man's covered call, we need to understand there's a lot of spinning plates. We need to understand that our Leaps call option supports all of this. And it's an 80 delta. So as the stock moves 1 for 1, my 80 delta is not moving 1 for 1. So there's going to be a 20% deficiency here. And obviously that's going to come out of the premium. What we're hoping for is this thing trades in and around the strike price of 135. Now, if it does move a little bit higher, I'm going to pay a little bit. That'll be okay. We're making so much money on this trade, we can afford to give some of that back. Now, with that said, let's take that $2,100 in premium and buy a monthly dividend ETF that also is knocking it down. Look, if you've never seen the YieldMax ETFs and what they are, well, I'll give you a quick primer. YieldMax came up with these ETFs where they use options. They're going to use a call option and a put option to simulate stock ownership. And when they have that in place, they're going to write near-term covered calls. They're going to sell puts as well, and they're going to have a hedge with some treasury notes. This is big business. And when I say this is big business, Wall Street has figured it out, where they could use call options, put options, simulate stock ownership, never taking stock ownership, generating near-term monthly profits for which the ETFs are paying some $1.20 for a month, $1.07 for a month, and last month they paid $2.46, and this recent month they paid $2.69. This is CONY. CONY uses Coinbase, and what happens is, as Coinbase is ripping, well, guess what? All those call premiums are paying hella jack. Their monthly dividends are paying some $2.69. Well, I'll tell you what, I invested in CONY way back here, and we've been collecting unbelievable dividend. I mean, come on. If you have 1,000 shares, you're collecting $2,600 or $2,400. You get my point. Now, what I'm going to tell you is this. These are beautiful to invest in, but they move with the stock. Look at this thing, man. It was down 7% just this past Friday. Why is it? Because it follows Coinbase. Okay? So when you invest in these things, you kind of set it and forget it. You pick a great stock, and what we're seeking is a monthly dividend paying stock that pays more than your typical 9 cents, 10 cents, 11 cents, like CHI, CHY, EOS, ETV, all those other things that I've invested in. These are dividend paying stocks on steroids. But here's the deal. I'm going to leave you with this. First of all, you need to know the risk of anything you invest in. See, I know the risk, and I'm willing to handle the risk. You know, if you've been watching my channel, I use 3X leveraged ETFs like it's butter on toast. We love it. We know it. We play it. They play the indexes. Look, if you're going to play the SPY, why aren't you playing UPRO? It moves 3X leverage, and you know if the SPY goes down, you're down. If the SPY goes up, you're up. But with that said, you have to make sure you understand the risk and which ones you're investing in. I invest in the indexes when it comes to 3x leveraged ETFs, and that's what I do. Well, in this case, this is using a stock to generate its dividend, and to say it's leveraged, I don't know if that's right or wrong, but it seems like it's leveraged. They're using options. What you can do is this. Go to yieldmax.com, see all of the information, learn about it, read the perspective, go on YouTube, read, listen, learn, because this sucker was trading at 28 bucks the other day, and it's now trading for 20. And everybody is running to the hills saying, oh my Lord, this thing is falling out of the sky. Well, they don't understand how it derives its dividend, so they don't understand the risk. And another thing I hear, oh, I'm going to throw all my money into COINY. Just because it pays a fat dividend, man. You never put all your eggs in one basket, man. I'm not the first to say that, but I'll tell you this. You do that, you're going to get your fingers snapped, right? So we want to make sure we're diversified as much as we can. So what I'm going to do is this. I make that hella jack $2,100 in premium on that Coinbase poor man's covered call. We're going to take that $2,100 and we're going to drop it into CONY, which is the YieldMax ETF, generates a monthly dividend. See, I take a semi-passive income strategy, writing covered calls, turning it into a passive income strategy, buying dividend, monthly paying stocks, just putting money into the account every single month, and we don't have to do anything. That's true passive income. So hey, look, you need to know the risk. In this video, we talked about Coinbase, hella risky. We talked about the poor man's covered call using leverage with leaps options, hella risky. Then we talked about CONY. I don't think it's risky, but you need to understand the risk to know that this thing moves with a hella risky stock. But I'll tell you what, if you understand the risk, you get your training, you get your knowledge, you get your education, then you go out and get your experience. And what I'll tell you is this, you'll then understand the risk, and hopefully you make good decisions and you can profit. That's right, risk reward. Without risk comes minimal reward. Put a little risk in the game, you get more reward. Hey, look, I'm not telling you anything you don't already know. But what I want you to do is this. If you want to be a part of my membership and see all these trade alerts, have access to all the tools that you don't, and see all the videos that you don't, go to cptdashboard.com, click Upgraded Dashboard, get your 1 free month offer. I'll tell you what, I probably do 25 to 30 trades a month. We do these kind of trades all the time, plus those in-the-money strikes, knocking down about $1,000 a week. Hey, look, be safe, be healthy, most important, be lucky. Until next time, look in the description below. May all your covered calls be profitable.